Introduction to Options Trading, Module 3, Trade Examples. This module builds upon Module 1 and Module 2 by combining the concepts to show you how I generate income from options trading. As you go through the module, watch the video, listen to the audio, and be sure to read the footnotes for the full course experience. Our advanced courses do a much deeper dive into trade strategy, trade execution, contract strategy, and contract execution, in addition to stop losses and risk management. When you have a strong foundation, I strongly encourage you to go forward and take our advanced courses. Take time to review the disclaimer as listed on your screen and then proceed when ready. Trade example, target, TGT. This trade demonstrates a price reversal and trade signal and targets identified on the half-day time frame. I identified a bearish shooting star candle that formed at resistance. If you do not recall the significance of a shooting star candle formed at resistance, please review Module 2. In this trade, the signal is the shooting star that formed at resistance. The signal suggested more downward price movement or a decrease in the stock's price. After I identify the signal, I planned my trade execution by next identifying confirmation as well as the first price target. The confirmation of the continued decrease in the stock's price would be if on the next candlestick the price of the stock decreased below the low of the signal. The first price target would be the low of the candle immediately to the left of the signal. The first price target is based upon probabilities that suggest a stock's price will retest a recent low. The candlestick to the left gave us the most recent low. The next candlestick confirmed the downward price movement when the stock price dropped below the low price of the signal. Based upon the signal and confirmation, I chose a put options contract from the options chain. Specifically, I purchased a put contract with a strike price of $177.50. I also predefined my risk in that the amount I paid for each contract was about $108 plus fees for each contract. This was the maximum I could potentially lose on the trade. Recall from Module 1 that predefining risk is a benefit of options trading. The strike price refers to the price of the underlying stock. $108 refers to the premium or the price to purchase the contract. Recall that the premium is your monetary investment in the options trade. Refer back to Module 1 to review the terminology to ensure you grasp these terms, especially options chain, puts, strike price, and premium. Let's continue to see how the trade unfolded. On the next trading candle, target price continued to decrease, and we reached the first target for this trade execution. Based upon my trade plan that was based upon probabilities that a stock price would retest the recent low, I exited the contracts by selling the contracts at the market price of approximately $263 per contract. Remember, these are the same contracts that I purchased for $108. $108 was my investment. So my return on investment was approximately $155 per contract, or a 144% return on investment before fees and any applicable taxes. Multiply the return by the number of contracts. For example, an options trader who bought one contract would be in profit $155. An options trader who purchased 10 contracts would be in profit over $1,000 in this trade. Just remember that both would have a return on investment of over 100%. Recall how to calculate your return on investment listed in Module 1. Trade example, XLU, the Utilities Exchange Traded Fund. This trade example demonstrates a price reversal and trade signal as well as first target based upon the month time frame. Unlike the previous trade recap that identified the signals, the confirmation, and the target on the half day. Here, the month of October at its close on October 31st created a bullish hammer candle for the month at a support level. If you do not recall the significance of a hammer at support, please go back to review Module 2, Technical Analysis. Here, the hammer candle is our signal. As discussed in Module 2, the hammer candle suggests that the underlying stock, in this example an ETF, may continue to increase in price from that support zone. Confirmation of the potential upward price movement would be if XLU's price during the month of November exceeded the high of our signal formed in October. The first target would be the high price of the candlestick to the immediate left of the signal. The target for this trade is based upon probabilities that suggest a stock's price will attempt to retest a previous high price. Upon receiving confirmation when the price of XLU exceeded the high price of the signal, I purchased a call with a 61 strike that expired on December 15th for about $146. Note that the expiration date I purchased is 2.5 months past the signal to provide reasonable time for price to reach the target. I predefined my risk in that the amount I paid for each contract, here about $146 plus fees, is the maximum I could potentially lose on the trade. Recall from Module 1 that predefining risk is a benefit of options trading. In December, XLU reached the first target high of the candlestick to the left of our signal. Since XLU reached that first target, I sold my contracts at the market price of approximately $291 per contract for about $145 profit, an increase of 99% return on investment before fees and taxes. Multiply that return by the number of contracts purchased. For example, an options trader who purchased one contract would be in profit about $145. An options trader who purchased 10 contracts would be in profit over $1,400 in this trade. Both would have a return on investment of over 99%. Recall how to calculate your return on investment from Module 1. Trade example, American Airlines, AAL. This trade demonstrates a price reversal and trade signal as well as targets identified on the week time frame, unlike the previous example that was identified on the month time frame. The week of May 13, 2024 created a green shooting star candle that rejected 50% of the previous year, 2023. The shooting star suggests that price may reverse and begin to reverse even though it had been increasing. I will note here that 50% of the previous year's price range is considered our resistance, which can also be deemed resistance in addition to the engulfing candles that we discussed in Module 2. Confirmation for the stock price reversal is if price decreased below the lowest price of our signal, very similar to the first trade example that I provided for target. The first target here would be the low of the candlestick to the immediate left. The second target would be potential support at the quarter level. Let's see how this trade unfolded. Upon receiving confirmation when the price of American Airlines decreased below our signal, I purchased a put contract with a 14 strike that expired on June the 14th, 2024. Notice that this expiration date was about 3 weeks from the date of entry. The week of May 20th, price decreased and met our first target, which was the low of the candle to the immediate left. At that point, The target provided over 100% return on investment before taxes and fees because the contracts were selling for about $62. Price continued to fall for this trade, and we met the second target quickly. At this point, the same contract that expired on June 14, 2024 was selling for approximately $278, providing over a 800% return on investment. Recall how to calculate your return on investment from Module 1. This is a good example of the low cost to entry for options trading. Here, this contract was only $30. Not all contracts are this inexpensive, but this is an example of how you can start options trading with less than $200. For more trade recaps, please visit the YouTube page for Dana Trades. You can find that page. It will have over 50 more trade recaps. youtube.com/@plant.harvest.multiply. Congratulations, you have completed Module 3 of the Introduction to Options Trading course. Consider re-watching and re-listening to this module at least twice before moving on. Repetition may help you grasp these new concepts. Also, don't forget about the Dana Trades YouTube page. Please like, follow, subscribe, and share. When you're ready, proceed to Module 4 for tips to continue your options trading journey, creating an additional stream of income, and getting started today.